Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will make some adjustments on our analysis on the euro currency, since yesterday the action has happened that really could be significant. And today probably you remember what should happen is there will be Fed announcement on the rate decision, but not even the rate is important per se, but what Fed will say about further perspective of the financial policy, the monetary policy. That will be the major importance for markets. Probably market will be quiet until Fed decision, Fed comments. But here has happened one event has happened yesterday that could change our expectation and our short-term analysis. If you remember what we have discussed on the previous sessions, we said that probably market could form some reversal pattern and reach this resistance area 111.06. This is the 50% level from the whole move down from this top to this low, 50% resistance. And we know that the euro currency likes to show such sort of the retracements. But today we have to say that currently we do not sure that this really will happen, because mostly the pattern that we have discussed and we have monitored previously, mostly it has failed. Why? Due to this important EST action. So take a look on the two sessions. If you will be careful with the details, guys, that you see on the market, these details could tell you a lot of information. Particularly speaking, what could say these recent two sessions to us, if you are really pay attention to these moments? Take a look what we have. Actually, here on Monday we've got the high wave pattern. This is not the directional pattern, guys. This mostly indicates some sort of the indecision of the market, and where market is choosing the direction, or it could indicate the pause in some previous trend. The importance of this pattern stands with this top and low, because depending what will happen, what particular extreme point market will take out, it will point the following direction. So if market after the high wave pattern takes out this top, close above the top, it means that market will continue to move higher. Vice versa, if market will close below the lows, it will mean that market is ready to continue move lower. This is the importance of a high wave pattern. We very often use it in our analysis because it's very important and very good pattern. But what has happened yesterday? Take a look, guys. What happened? Market has opened, create the new top, so taken out of the top of the previous session, but at the end of the day, is dropped lower and closed below the lows. Not just create the new low, but it closed below the lows of the high wave. This action calls as a reversal session. Why? Because market creates the new top but closed below the low of the previous session. This action means reversal session. What does it mean? It means that this has in fact two main meanings. First of all, in relation to this high wave, it indicates that market has turned down, because this is downward reversal pattern, and by itself the appearance of the reversal pattern is the bearish moment. So it significantly increases chances that market will continue to move lower. Now let's recall our yesterday patterns that we have discussed. But first, here will be probably the destination point. this will be a minimum target. So it doesn't mean that market will stop here and turn to the upside. In fact, market could really continue move lower and reestablish the bearish trend. That's also possible. This is just the level that market should reach anyway, despite whether it will turn up again after that or it will continue move lower, because that will be the support that let market to release this drop, will let market to release the rest of the bearish momentum that we have discussed. So this is a necessary condition to fade out the previous momentum. If market is bullish, it probably will find some support, will form some reversal pattern here and turn to the upside, and we will get some kind of the ABCD pattern that we have discussed. But if market market will just reestablish the trend down, so it will drop lower and will continue move action down. This is also possible. So now let's take a look at the patterns that we have on the forward time frame chart. Recall what we have discussed. First pattern that we have discussed was free drive. And we said that probably market, the attractiveness of this pattern was with the final destination. So at this point, the destination of this pattern stands in agreement with the daily 50% level. So the perfect picture has suggested that market will form free drive precisely at the resistance and will turn down. Just a perfect picture. When the market, when the reversal is confirmed by a reversal pattern right at the fib resistance level. This is just perfect. But what we have instead? Market wasn't able to reach this area and drop lower. And the importance of this dropping stands in the level of those lows, because take a look, these lows stands below that lows, and simultaneously market by this action has erased opportunity for the butterfly pattern. So butterfly has failed since market has left the major swing of the butterfly. To keep butterfly valid, following price action should stand inside of the initial swing of the butterfly. If this condition has been broken, it means the butterfly has failed. And finally, guys, market also has erased the free drive, because market has dropped below the bottom of the second drive while it hasn't quite reached the third drive. It means that this pattern is not valid anymore and we can't rely on it. That's why our major swing that we should stick with if you would like to trade euro currency to the short side of the market will be this swing, the swing of the reversal session. But I have to warn you that the reaching of this area could happen on some volatility spike or some nervous reaction on the Fed Reserve comments. You know how this usually happens, when the market could show that spikes or just some extraordinary shadows of the candles. It could reach this area just in the momentum and then return right back down. That really could happen. That's why be careful with taking the short position. Theoretically, if we wouldn't have today the Fed statement, I would say that, guys, just catch the resistance inside of the swing and trying to take the short with a possible downward continuation. But since we have the Fed today, the volatility could grow significantly, and if even we will become right and market really drop lower, we have the risk to be washed out by some occasional spike, nervous reaction in the markets when important data released. So you know, guys, that's really very often happens. That's why be careful. Maybe it makes some sense to place initial step a bit far from the current resistance area. So maybe above this area slightly to avoid the just occasional triggering of your stop. But from the technical point of view, we need to watch for this recent drop. So currently market is forming some kind of the flag consolidation, and inside of this consolidation we could see some really lightning bolt ABCD pattern that again points on the possible 50% level. I'm not sure that will be definitely completed, but it seems that an area around 109.65, 109.80 area is an area where we should watch for a possible taking the short position. hardly market will pass through it because I have marked this area with this yellow rectangle. So if you'll take a look at the contraction chart, you will see that this is a significant natural support resistance area. So that was the previous consolidation. This was previously support. Now it will become the resistance. So market probably will stuck inside of it somewhere in this area before drop lower. You could try to take the position after the breakout will happen. So that will let you to save your money on the possible far stop. So to take position after the Fed will give their comments on the current situation, on the rate decision, on the way down with some minor retracement. That's also possible. This is conservative tactics for the possible trading, because the potential of this drop is really significant, and I think that we have a lot of time for taking the short position. If you would like to anticipate this event, well, in the current situation, probably this is an area that we should watch for, but you will have to place really far stop just to avoid, as I said, occasional triggering of it. So decide what scenario you like better. So conservative tactics, entering after the drop will start, or aggressive tactics with anticipation of the possible rate decision and comments from the Fed. For those of you guys who would like to trade market on the bull side, in this case, you already get some clarity. So this patterns has failed that we have discussed. That's result, some kind of the result. Now you just need to wait when the market will reach some support there and then monitor what will happen there. So we will see such sort of action, but to the downside, it's probably hardly we will be able to take the position here. So we need to see how market will react on the supports. If we will get some hints on the possible bullish reversal again, in this case you could try to take the long position. But right now I think that's it's a bit too early for that, especially after the reversal session that has been formed recently on the euro currency. So let's keep watching. Today's really thrilling moment, thrilling trading session. And guys, be careful, since you know that in the Fed statement, it's really volatility grows significantly, and it's really could be very painful for our accounts. So I just have to warn you, and but I hope that we will get what we really want to get from the current Fed statement.